What's up, guys? It's been a little while, but I figured I'd make a video here. Got a bunch of questions, which are likely kind of common questions, so I want to answer them in a video and talk about some stuff. I am on break right now from the live sessions, but I will be returning. We'll talk about that. So, I want to answer these questions from somebody who bought the course, who apparently liked it. But he has some questions here, and I want to run through that and answer. It might help other people have the same questions. So let's get started. Question one: what if I don't have the time to stay in front of the screen during the main trading times? And that's probably something a lot of people deal with. Is it possible to simply trade on the 1 hour time frame, i.e., analyze the background on the 1 hour, 4 hour, and trade the signals on the 1 hour with wider stops, wider targets? I guess a more swing position trading approach rather than day trading. What would you suggest? Okay. Well, the thing is, I mean, I don't have that issue because, obviously, even if I'm not watching the charts constantly, what I do is after my initial analysis and spend a couple hours or an hour on the, depending if I'm having a live session, um, if I don't have a trade immediately, I mark up areas or I set alerts at areas where I'm looking for potential setups. So knowing my method, once you do your analysis, you're pretty much left with areas that are available to take trades, whether it's a support, a fib retracement, a fake breakout pattern, which could be set as, just above or below or support resistance. So there's not, sort of random areas where I would take a trade anyway. So typically, I'm setting an alert if I'm not watching the chart after I do my initial analysis and I don't get a trade. Um, Now, really, what I teach is reading a chart. So if you're able to take this information, it's factual, and have it work for you in a way where uh, you're looking at 1 hour chart really as your overall as your home base. The thing is, the 5 minute does give really good information. One thing I would suggest is this: again, do the same thing where if you're not able to stare at the charts, okay, you do your initial analysis and you mark up those areas, you set an alert. Now, if you're at work, you still may not be able to do it if you're busy. But for me personally, I would really need to see what it looks like at the time. So I can have an area that's great for a setup, would be picture perfect. But for me, I want to see, the smaller time frames and see how it reacts when it gets there and if it's doing what it's supposed to, and confirming the trade. Um, Having said that, we're reading a chart, we're reading facts, and if you want to use the analysis in a different way where you're not looking at that, again, it's not something I could do like that I do, and I'm not like experienced in trading in that way. But uh, again, you could set an alert and try to look at the setup, when the time comes, if possible. There are times where the trade setup is very likely, very high probability. If you have a good healthy trend, it's moving up, and there's just no weakness coming in, and you're pulling back to a confluence level of fib and a previous resistance turn support and a 50 EMA, typical things like that. It's very likely that there's going to be buyers coming in. So it's likely a spot where the trend would continue from, and if everything's pointing in that direction, and you want to sort of set an entry, set and forget, I suppose you could. I would try that on demo and see how that goes for a little while, but it's just not really what I do. Again, if you can just take a quick look, you know, over 20, 30 minutes, checking in when price gets there to see if you actually want to take that trade, that's what I would suggest. For me, I'm pretty set in my ways and what works and what I do. So is what it is. I don't know if you can make it work for you. So let's get to the. So what's the answer? Maybe. If you're confident with reading the chart and confident the trade will set up, I think you can attempt to do it on demo and see how you're doing with that. Another thing is looking at the chart from only a 1 hour point of view, and I'm not even saying the 4 hour because 1 hour is really my home base for my background, and then 5 minutes to get the details. If you're only looking from the 1 hour point of view, again, if we're going with a trend, for example, I'm not concerned with a 1 hour confirming the trade. A 1 hour sign of strength takes up to 2 hours to confirm, right? It's a 2 candle pattern. And if you're going with a trend, the setup could have come and gone by the time those, hour, 2 hours go by. If you're talking about a reversal situation, a reversal of a trend, or even a range trade, which I particularly like the fake breakouts on a range. If volume is confirming that it's a range, and you could get a signal where the 1 hour also confirms with a sign of high volume strength or weakness to enter that trade. It does happen, but there are times when the 1 hour is really secondary or even irrelevant if I have the proper situation, and I can just simply take the 5 minute setup, which could be way before the 1 hour even confirms an entry. Now, if you're looking to swing trade, I can understand, positioning, scaling in, scaling out based on the analysis and everything. But again, that's not what I do. And if you could figure out something that works that's really based on facts and what you're seeing on the chart, then hopefully you'll do well with that. That's the best answer I could give. Number 2. What brokers are you trading with, or could you advise for FX trading? It does not matter whether they offer MT4 or not. Yeah, I don't like trading on MT4. I love doing analysis on MT4. I probably always will. I've paid for charting services, and I like MT4 the best. But as far as recommending brokers, I really try not to do that anymore because in the past, brokers have come and gone, and these videos stay on YouTube forever. The best thing to do is really go with brokers that are, first of all, depending on what country you're in, you have different brokers available to you. I'm in the U.S., so there's plenty of brokers that I can't even trade with that you may be able to, and vice versa. But the the best overall recommendation for a broker is really that they've been around for a long time. If they just popped up and they're brand new, less than a year, I would definitely never open an account with a broker like that. I like to see that they have a track record. They've been around for a while. Now, another thing is that you're going to find good and bad reviews for every broker. Every broker, if you're looking at reviews, is going to have somebody saying they're crooks. So you have to take that for what it is. I don't think you'll be able to find a broker without negative reviews. That's just life on the internet. So again, it's really going with the ones that have been established and around for a while. That's my best recommendation. But yeah, I do like trading with typically the platforms that come from the broker rather than MT4. I stopped trading on MT4 years ago, and I don't know if it's improved, but it was always the disconnections and, can't get into a trade when I want, can't get out of the trade when I want. You get that sound. So I just got off of that and noticed that the, brokers platforms are typically the most reliable. Number 3, which MT4 platform broker has the most reliable volume data, tick data? Yes. That's something that's become, I've noticed, less of an issue over the years. It used to be really, there were some differences. Man, if you've been trading a while in, FX Solutions, they had the worst volume ever, but they disappeared. So really, what I've been using is, you can see the demo here, is Pepperstone, but also as particularly if there's any funny business, I'm also subscribed to TradingView, which is not expensive per month, and they provide a few different broker sources for the charting that you can flip through as you're looking at the charts. You could say, let me look at Awanda, let me look at FXCM, and you can actually compare a few. So having I would go with having Pepperstone and checking with a couple others maybe before you get into a trade, or once you do your analysis, just checking up. Also, 9 out of 10 times here, I'm trading with the live session. Right now, I'm not even trading at all. I haven't looked at the charts in a week. Just taking this break. But I had the luxury of trading with a group. So if something's off on my chart, if somebody has something very different, they'll usually say to me, hey, Pete, that volume looks weird, or it's very different from my chart, and we can investigate. And that's not normally the case, but it does happen. And we can investigate and see which one is more representative of the market. by really comparing brokers. Now, having said that, at one point we did have a multiple broker source volume feed with, I think we were up to 10 brokers, volume, price feed, feeding the volume indicator on our chart. So now we have a really wide view of the market. It was costing upwards of $2,000 a month. I had nothing to do with the programming itself, but that was a little steep. Now, I am talking to somebody who's got it down to much less, and the software that I've seen so far from these guys is very nice. So there may be something that I can offer in the future. We're talking about that and having that offered possibly on my website for multiple broker volume feed on your chart, so you really get a wide view of the market. So we'll see if that comes around. And again, Pepperstone, they've been around for a while, but hey, they may disappear. So, you got to sort of realize that things are usually not permanent. And right now, I do like it. But over time, who knows? They could go out of business. They can get bought up by another company, which gives you funny volume feeds. Occasionally you'll get missing data on your chart where you'll see suddenly really low volume or no volume on a candle, and you go, "What the heck is this?" That stuff. It's always good to at least have more than one chart to look at and confirm anything you're seeing, particularly if it looks funny. Okay, hopefully that's a thorough answer. Have you heard of Pit View software? I did not, but I did a quick visit once I saw your question. Didn't really attract me what I saw there. Shows you all the liquidity providers and whether they are aggressive on the bid or ask. This could be a nice addition to your style of trading. Okay, so if as I say about any tool that I don't use, if you find it useful, and once you feel like you really learned the method and a little bit of extra information, could come in from some source and help you, that's fine. But for me, I'm so settled in what I do, and it's so repetition based, and I have tried everything and looked at everything, and I feel like really there's nothing that could improve what I'm doing as far as any extra information. If you notice, I'm using just a regular old volume indicator that comes with MT4, not fancy colored labeled stuff. I would say in general, you find something that works and you do it, and then that's where I am now. So adding additional information I don't feel like is required or is going to do any good. But again, if you're not using it as a crutch, if you actually know the method, are doing well, are reading the charts right, and you feel like you're getting some additional information to help you decide, that's fine. Personally, I don't feel like it's necessary, and I've kind of been there, done that as far as trying things out. I've tried everything, and if you notice, I got 2 moving averages, a regular volume indicator, nothing else going on, right? Basic technical analysis. That's me, but who knows if it's helping you. But one thing I do suggest for people is, I'm not using the sort of traditional VSA method where I have a bunch of labels for bars and certain things. Like I always say, I took the VSA information, the wyckoff information, the technical analysis. I tried everything. I started trading in 2003. I got my first demo, and this is where I'm at now. And it's where I've been at for many years, and it's really what I found works, and doing it my own way. So as a side note, if you're finding conflicting information between what I teach and somewhere else, that's fine. I like what I do. And this is just a general statement to everybody. And just as a reminder that I may not, I took a little from there, I took a little from there, and I put it together as something that I think is a little more straightforward and makes sense and more logical. People seem to agree. And so on a side note, extra stuff, extra information, other sources, for me, I don't feel is necessary anymore. Hasn't been for years. And when someone says, check this out, what do you think? I've kind of given up on that. But I did check. Didn't seem like anything too exciting for me. Okay. I hope these answers are worth something for you guys. I'm trying to just be honest. Can you show one recent example of a bread and butter trade setup? Well, I haven't been on the charts, but we can look. this is my first break since December, since Christmas last year, of just like, let me get away from the charts and live life a little bit. It's summertime. Uh, have a regular sleep schedule. I don't have to be up at 3 a.m. to trade London. But we can look back on the chart and see what I can find here. Here's an example. One with the trend and one counter trend. Well, I would suggest, and I always give this answer, but it's a good one. My YouTube videos, there's so many videos showing so many setups, and typically when I'm showing in these YouTube videos, my trade setups that I take are the bread and butter trades. I'm not trying to show some weird, lemonade trade, as I call them, as people in the group know. When the chart gives you lemons, make lemonades, but make lemonade. But don't try this at home. Only if you really know what you're doing. Those kind of trades I don't post. So really, what you're seeing 99% of the time, what I'm taking is the bread and butter trades. You can look at the YouTube videos, and if you're taking a couple hours and just going through all these videos, you're going to start to see the same things over and over again. That's the point: repetition, repetition, and just making sure the factors are lined up. It's not really trade by numbers. It's not indicator based, obviously, but you're going to notice that the trade setups are very, very similar over time. If you watch the YouTube videos, there are trend trades, there are reversal trades. But let's look at the chart. All I know is it looks like we're ranging here for a little while. I have not traded this past week at all, or even looked at the chart. Where are we? I kind of like not giving a crap for a while. Let's see. It looks like summertime action, right? We lost some activity on the volume just after around the beginning of July, which is what I normally say around the July 4th holiday is kind of my marker for, if the market's dying down or if I feel like it, I can take a break. It was like a marathon since January for me. And you can see the decrease in activity and the range in price, which is typical, coming off of some nicer action in May. So let's get in there, though, and see if it's even tradable stuff lately. It actually doesn't look too bad. I've seen much worse for late July than this. But in a range, which has sort of trending moves within it, if you notice, there's a couple of waves down, a couple of waves up. So it's like a range behaving like a trend within it, right? It's not a tiny range. A couple 100 pips, 300 pips. But what I'm seeing here is, again, we're not doing a whole top-down analysis here, but one thing that's jumping out at me here is if you look at after this up move, which is pretty strong, again, it's overall trend, but there overall range, but there are trends within it, which, by the way, was constant through here, was trading this all like trends. People that were trading with me earlier in the year, it was like trend trades, but in the end, we went nowhere. This is an actual trend on the daily chart. But again, we're here with some trending behavior within it. But what I notice here is very high volume leading to higher prices. This really stands out, as some of you who know. If you've moved up and you've accepted higher prices, in this case for many hours, on low volume, right? We didn't see enough sell activity here following through, right? We floated up. If you've moved up and had a good up day like this, and you've ended the day in the high price area, gone into Asia, actually new high ground here, and we see very little activity, then we are bullish, right? Otherwise, we'd be seeing weakness. Now, it's not no demand. Don't worry about that, because it's definitely not. Demand is tested for at lower prices, not higher. So in this case, we have an imbalance, right, where there's a lot more demand than supply. And it behaved pretty well as far as momentum and we could say a trend. So what I'm seeing is right on the fib, we hit our volume. There may or may not be a setup in there, but if you notice, again, lack of any activity. The down move was pretty quiet on this day, and then we hit the fib, and suddenly we get this, right? So let's get in there. July 24th. And yeah, there it is. So very high volume suddenly popped up off the low price, high volume. Low prices tell you about buyers. We were in the fib zone. This is when we first entered the fib area. We first touched it and tested it, and that was the highest volume of the session so far. It looks like we're just getting into London Open here. And I don't really trade this time of day. I do not at all. So we got into London Open. We tested the fib area. We got strength, strength. And again, this is strength. Even though the candle closed higher, doesn't really matter. It's a matter of lower prices attracting buyers and the result. And that's what happened there. They attracted buyers, and we had a bullish result. This is actually a very textbook situation. Here you have the no supply, the low volume test for sellers. Now, notice in this case, it just blew right through the 14 EMA. It didn't pause and test there, which says that the buying is pretty aggressive off of that strength. But we did test at the 50 EMA, and normally you'll get some confluence in obvious areas where you're going to test. This is all stuff in my videos. And you can see it was basically where are we breaking this little 618 support resistance spot or not. But I do like the 2 EMAs for testing. Not any sort of crossover silliness, but they are support resistance test areas. So we do have strength showing up at fib, right? No supply. This might have been news, but we did end up moving up off of that pretty well. And it looks like we went back to the high. Yeah, well, close to it. Looks like we got to the box. But again, the best thing to do if you want to see trades and see bread and butter trades over and over again, yeah, we just made it to that, which is why I mark boxes on targets too. That's just a recent example that I just found, sort of out of context. Well, it's a range with a trend in it. But there's the principles at work, right? You see the imbalance is shown here, that the selling is very inactive, down move very low, the signs of weakness not there, and then our typical fib reaction and 5-minute setup there. And again, if you're just trading off the 1-hour chart, that's a tough one. But if you set an alert when price got there, you might be able to, again, get in the trade, get the 5-minute information, and not having stared at the chart waiting for something to happen. Just let you know when it gets there. That's the best thing I would do with that. Best thing I could recommend. Well, there's a recent situation. Let's continue. So if you could take, because you want to take a perfect setup and print it and hang it next to my desk to always compare setups to this one, sort of as a reference. Yeah, I mean, if you could take a screenshot off YouTube videos, you can make a collage. And thank you, T, who asked not to be named. And then another one with no name here, just to leave them anonymous. Okay, let's get to this last question from somebody else. I watched many of your videos repeatedly as you suggested. Yes, I always suggest that. I don't recall why you don't trade on Monday or Friday. Not trading on Friday, I believe, is due to traders unloading positions. Yes, which there is more unloading positions on Friday than typically, obviously, any other day. Going into the weekend, so it may give a skewed view of the market. No trading on Monday, ? Okay. Mondays, first thing is they can just be low volume and pretty inactive. It doesn't mean that you're never going to get a setup, but it really depends on what works for you as far as, like for me, again, it's London Open is 3 a.m. So I found that having to be up at 3 a.m. on a Monday was not worth it a lot of time because the market needs to sort of warm up and wake up. A lot of it also has to do with the mood of the market. Sometimes you'll have for months really slow Mondays, and then for months you'll have very active Mondays. At least more active and tradable. It depends kind of what mood the market is in for the moment. But really the thing is, and what you said about Friday is true. If you had an uptrend, if you moved up throughout the week, if you see that smart money bought throughout the week, you're typically going to get a weakness on a Friday. And that's not something I would want to trade because that's a lot of getting out of positions. And I wouldn't, especially once you get into New York session, mid-session, times, midday, that looking for a reversal setup on a Friday because you've moved up and seen high volume weakness. Definitely not, in my opinion, communicating that it's time to go short. Smart money is, positioning short, and we're trying to get into a downtrend and a reversal here. Obviously, if you were long, you would consider before the weekend taking some positions off. That's a lot of what happens. So there is more exiting, obviously, on Fridays than any other day. And I want to skip that and not take that as a signal necessarily. So there's also one day a month. Friday is non-farm news, and I don't trade that day ever. Even if I did trade Fridays, and I know traders who trade Fridays and they don't trade non-farm Fridays, the first Friday of the month, because of the big news there. And that's, there's real reasons for that, where the market wants that information. And going forward after non-farm is typically good. But I leave that day. And really, just worth mentioning, any, interest rate decisions, large news days. If there's an interest rate decision for the pound, I'm not trading the pound, likely the day before, but definitely the day of. So any large news, I mean, really what it comes down to is repetition, which most of you know. It's all about the repetition, and the setups are going to look similar and repeat, repeat, repeat. It's not about, your broker might try to get you excited about trading non-farm news and then, news trading strategies. That's absolutely ridiculous to me, in my opinion. And it's the opposite of what I want. So I don't care if the chart moved 300 pips on non-farm and there was a long entry before it happened. I don't even care. I have no care in the world when that stuff happens. I don't cry over missed moves because I just want the repetition. That's what keeps it coming in, right? The repetitive high probability setups. So that should answer the question about Mondays and Fridays. Yeah, Monday's hit or miss. Again, schedule-wise, it wasn't worth it for me. If you have a really clear background, let's say going into a Monday, and the market is just seemingly continuing that story, and there's a clear signal, that's fine. If you're looking at Friday and you're saying, well, the market just kind of got a little messy on Friday, people were getting out of positions, XYZ, then I wouldn't even think about trading Monday London Open, right? A lot of it has to do with, are we continuing the storyline, and are we still clearly in a decisive mode here, or are we sort of getting into messy Friday, quiet Monday stuff? So you can kind of determine maybe even before Monday open if you want to, even if you think it's worth it, depending on how the previous week ended. What else? All right, so that's it on the questions. So, like I said, I'm not trading for the moment. This is my first break since January. I'm not even thinking about the charts. My daughter's off from school, obviously, so I want to be up during the day. The courses are available, of course, still, and everybody's always been happy with those. So if you want to purchase the courses on the website, they are there. And what else, guys? What else? If you want to know when I'm going to return, do I have the website up here? If you want to know when I'm going to return to the live sessions, you can put your email in here. I never spam. I barely email you guys, as a lot of you know. But important stuff, I will let you know if you enter your email there. And that's it. If you have any questions, you can type them here. And the video courses are here. And that's it. All right, guys, I hope that's helpful. It may not always be the answers you want, but those are my answers. And I'll try to do more content now and keep in touch with you guys and do some more stuff. So we'll see you soon.